It's midday right here in Lagos, Nigeria, Nigeria's commercial net center. I'm Jeffrey Uzama, bringing you up to speed with the big happenings in politics and in the polity at midday. Let's get started with the headlines. And it's freedom at last for the 24 girls that were kidnapped in a school in Kebbi. The governor has now confirmed that the girls have now been handed over to the people. And the Edo state government cracks down on kidnapping as security squad demolishes building linked to kidnappers. It's an all-access pass, so everything that is playing out in politics and the polity right here on the program. But we'll get started with some great and cheering news that 24 students of the Government Girls Comprehensive Secondary School in Maga, who were abducted by bandits and subsequently rescued by the military, have been formally handed over to the governor of the state, Nasser Idris. The ceremony was performed by the theater commander, Major General Idris Wara, in Birnin Kebbi, acting on the directive of the Minister of State for Defense, Bello Matawale. Receiving the schoolgirls, Governor Idris expressed gratitude to Almighty God and thanked the President, as President Tinubu, for deploying the full machinery of government towards the success of the operation. The governor assured the military that comprehensive medical checks will be conducted on all the children before they will be reunited with their families. Well, that's some cheering news, and we expect that more of those news will be coming through, especially the ones that are still in captivity, both in Kwara and in Niger. But let's also tell you that the Edo State Special Security Squad has demolished some property linked to suspected kidnappers in Egbain community of their northeast local government area of the state. Speaking after the demolition, the coordinator of the squad, Noah Idemodia, said the suspected kidnappers who are currently in police custody have already confessed to their crimes. He warned and reiterated the state government commitment to curbing heinous crimes in the state.
We came to carry out a demolition exercise at Egbain community located in Ovia northeast local government of one self-confessed kidnapper, Attorney Fegboy or something, a Feda, and his co-kidnapper, who are indigenes of Delta State, but carry out their kidnap trades in Edo State here. The police arrested them after they were about to carry out a kidnap attempt on a business person, requesting for 500 million ransom. That was where they got caught. They have been in the business for a while. They had done some kidnaps that had led to a suspect. After collecting the ransom of 30 million, the suspect was killed as well. These persons have been in this trade for a while now, and it's unfortunate, like we always say, every day for the thief, but one day for the owner. I will use this medium to advise those that are still in this act. It's only a while. Just watch, take a look at those that have been caught in this act. The lifespan is so short. No matter how smart you are, you'll definitely be caught.
I like the way you ended that. You'll definitely be caught. And that's when the might of the state comes on you as far as this issue is concerned. But let's also tell you, besides the issues around security, the economy is also in focus, and that's going to be the focus of our conversation today. The Monetary Policy Authority, the monetary policy rate was retained at 27% following its latest policy meeting in Abuja. The move highlighted the bank's commitment to maintaining a tight monetary stance amid high but reducing inflation numbers. And that's why we're bringing my guests on the program as we begin to break down these numbers for you on the program today. Mr. Kelvin Emmanuel is an economist. He joins us from our Abuja studio. Mr. Emmanuel, thank you so much for coming on the program.
Thank you so much, Geoff. It's always a privilege to be here. Thank you for having me.
So let's help the Nigerians break down. Let's begin with the basics of the numbers and what this means. So 27%, I know that it was reduced in the last MPC and now it's retained at 27%, although inflation, I think, is around 16%. Some people, nobody really believes they're going to hike. We're expecting maybe 50 basis points is at the least we could see, but they decided to retain. And the MPR, the asymmetric corridor around this plus 50 minus 450, simply saying look in the direction of loaning more to the market and expanding the economy. But what's your interpretation of these numbers?
Geoff, you know, I'll tell you that the central bank in the last 2.5 years has done a good job at managing the economy, considering what they inherited from their predecessors in 2023, considering how they manage the external reserves, even if I don't believe the net asset ratio is $46 billion like it's being quoted, because of the encumbrances that they still have, you know, in all kinds of FX swaps and forwards. You know, the forwards, I think, has been sorted out, but the loss of the companies that had about $2 billion outstanding. You know, however, when you look at the fact that the Monetary Policy Technical Committee and the Monetary Policy Implementation Committee, which are support secretariats for the Monetary Policy Committee at the Central Bank of Nigeria, has recommended for the MPC board to keep the rate steady, despite the fact that if you're looking at the inflation to interest yield curve, if inflation rates is dropping, according to the MBS, which are not believable numbers, you know, naturally, you're supposed to adjust the interest rates down because the CBN operates what they call inflation targeting. So that corridor shouldn't, that curve shouldn't be more than, say, 400 to 500 basis points. So naturally, if the CBN believe, or if the MPC believe that the inflation rate is actually 16.05%, like MBS is claiming, because they rebased the CPI and they used 2019. But beyond doing that rebasing, what they did was that they reduced food from 60 to 50.8% and reduced energy from about 20% down to less than 30%, which is the reason why you're getting these numbers you're getting that is not in tune with reality. The CBN MPC would have reduced MPR, and that would naturally affect the prime lending rates, you know, for banks. But they've not done that. And the fact that they've not done that consecutively over the last 3 to 4 months is proof that they don't believe the inflation rate numbers that the MBS is putting out. You know, and it's in direct contradiction to the standing lending facility and the standing facility rate, which is the rate at which banks keep money at the central bank to the rate at which the central bank gives money to the banks. You know, them trying to encourage growth, but at the same time keeping the MPR steady to avoid a situation where if they reduce the interest rates to match up with that inflation targeting inflation to interest yield curve, and it turns out that inflation is actually higher than what MBS is putting out, there's going to be a capital flight from Naira to dollar-denominated assets, and that's going to lead the inflation numbers back up in the real rates back up. So I think that's what the MPC is trying to avoid. That's why you've seen this. But, you know, I think, Geoff, that the government should leave propaganda and focus on real governance. Instead of you to appear to look good, focus on the drivers that will actually make you look good. That's my advice for the government.
I see you've made this argument over and over again, and now looking through the numbers, and I'm sure you're talking about the yield curve differential that should be in the corridor of, say, 4 to 5% at max. but this is wild apart, even with the rebasing and the hesitancy of the monetary authority to follow through, as you said. Don't you think it's about waiting for sustained growth, say 6 to 7 to 8 months, and looking at the FX stability? That's why they're a bit more careful. Or this is just, as you said, something is not panning out right.
Even before Cardozo became governor and this new board was established, under the previous board regime, as inflation crept up after, Russia invaded Ukraine, supply chain tightened around the world, and Nigeria had difficulties, bringing in fuel and food and all the other derivatives that make this energy and food work. The central bank was hiking interest rates. As inflation reading went up, they were hiking interest rates 150, 200 basis points. You see, forward guidance that is given by the central banks all over the world, Federal Open Market Committee, in the U.S. Federal Reserve, it doesn't quite work that way. You don't wait for 6 to 7 months to see if there's going to be stability to the inflation rate for you to adjust the interest rate. It doesn't quite work that way. Anybody who is saying that they're afraid that there's going to be an inversion of the yield curve where rates on short-term government bonds go higher than long-term government bonds is just being clever by half, and is aligning with the desire of the government to look good rather than actually be in good health. Geoff, look, if you go to a hospital and you're not feeling well, you don't tell the nurses or the lab or the doctors that you want your lab result to be good. You don't tell them. The prognosis on you will show what your actual state of health is. Their job is to treat you and get you back to good health. That's the situation with Nigeria. The government is at the hospital. It's telling the medical staff that it wants the lab results to look good, when the focus should be actually on making sure that the patient is treated properly and that it comes back to good health. It's not a good look, because there's nowhere in the world where a government, politicizes statistics just to, appear that the inflation rate is actually coming down. It doesn't make any sense.
All right. Yeah, Mr. Kelvin, truly strong words you've used. I feel that anybody who politicizes statistics is borderline treasonable. In my view, that's just a personal opinion. And as you said, I remember when the inflation numbers were going up, that's how the interest rate was actually chasing it. Just like what we see in America, as FOMC chasing CPI as against NFP, depending on what they want to do with the numbers. And that brings me to my next question. As to the disconnect sometimes, they detach from reality sometimes, they sometimes detach data in some sense. So we look at this building of macroeconomic dashboard, looks very beautiful. Whether you're looking at our external reserve, which you debate over, at least our currency is stable, interest rate is high in the country, so sometimes carry traders will have a good time bringing their monies here. I could go on the big dashboard that looks very good. But Nigerians constantly ask that question is, which I want you to help answer. When will this reality, when will this beauty at the forefront get to our pockets? Is there a question you can maybe provide an answer for?
Geoff, you see, when you look at the macroeconomic dashboard, you're looking at 3 factors: inflation, exchange rates, and interest rates. Those are the 3 major drivers. Yeah, you can say that the credit rating is improving. Fitch, Moody's, B3, from CAA, which was junk territory, and B, they've removed from, Fitch has moved from B- to B, which is good. The country risk premium on Nigerian debt is also adjusting. And you see that FPIs are, looking at the reforms, the removal of petrol subsidy, removal of FX subsidy, stability in the FX markets, and the fact that the level of intervention from the central bank has reduced as compared to what it was 2 years ago, and the markets is operating on willing buyer, willing seller. And the central bank did something, early last year where they reduced the capacity or the tendency of banks, deposit money banks, to speculate on the exchange rate onshore by reducing how much FX they can hold onshore to 0 for long and about 20% for short, which was a master stroke on their part. However, focusing on only FPI dollars alone coming into Nigeria because it's hot money, You can see when the government announced that there was going to be like a 30% capital gains tax from January 1, you saw the interpretation in the stock market. There was a sell-off in the stock market, because those FPI dollars were not quite, attuned to that decision on CGT. The real drivers of growth in an economy that will actually come in and create businesses, industries, and jobs is non-speculative foreign direct investments, not hot money or the FPI dollars that we're so used to. And for you to see those non-speculative foreign direct investments, there are several factors you have to look at. The investors look beyond just the, macroeconomics. They have what they call a PESO framework: political, economic, social, technology, legal, and environmental factors that all go into their decision-making process on whether they are going to deploy real institutional capital that can last beyond 5 years into the economy, to real industries, not monies that come into the stock market or to buy government bonds or government treasury bills. Those are not dollars that actually grow the economy. Those dollars you can, at best, use to stabilize your net asset ratio for the FX markets. They are good, but they are not as important as actual non-speculative and direct investments. On the side of when will Nigerians feel the impact, look, it takes minimum of anywhere between 48 to 60 months, or that's 4 to 5 years, for you to actually begin to translate macro gains to nano gains, where the man on the street begins to feel the impact on inflation coming down, the lending rates coming down, and the cost of living improving, their GDP per capita improving. It takes time. But then the question is, why do Nigerians not believe their government? They don't believe their government because the government has asked the people to make sacrifices that the government itself is not making. And that's the moral burden or moral hazard we have.
Strong words again. So I'm trying to cover as much grounds as possible. I was listening to a gentleman, a Chinese gentleman. He said what China did in '78 under their leader then, Xiaoping, was, he said it's not capitalism, not communism, but socialism with Chinese characteristics. The reason I'm saying it the way I said it, because I remember Donald Trump was in the Gulf, and when he was in Saudi Arabia, he said, he calls it modern miracle, the Arabian way. I don't know whether we need to develop our own model or some kind of development for us to begin to see the kind of development and aspiration that we all dream of. But that is going to help us segue into the NNPC numbers. I always like to talk about the NNPC like you because that's our cash cow. We've seen the numbers coming out. I've said no matter how much we vilify Mele Kyari, one of the things he did was to be able to help us to see what the numbers look like, how bad or how good. So if you go back from 2018, when we're recording minus 800 billion to today, what's the number now? 5.4 trillion in net income. What do you make of this?
Geoff, I've looked at some parts of the financial statement. I looked at the cost to income, the expense sheet. The cost to income is about 74%. I looked at the line items. I looked at things like NNPC said they spent 149 billion naira in pipeline maintenance costs. They said they spent 1.5 trillion or $1 billion in crude handling and port charges. They said they spent 2.5 trillion in direct well expenses. Direct well expenses, considering that NNPC as a company does not have the technical capacity today to drill crude and trap gas by itself. It operates what they call financial and technical service agreement, where it gives out these contracts. And there are some questionable ones, like OML 13, OML 11, especially OML 13, where, the equity was converted, a contract that was given to a contractor was converted under PSC to a JV without actual ministerial consent and without a bid round one or a farm out agreement, where, this equity was given to a contractor. And so you begin to ask yourself, how are you spending 2.5 trillion in direct well expenses to produce oil and trap gas when you're operating an FTSA framework? NNPC says it spent 30 billion on entertainment expenses, 30 billion naira in entertainment expenses for 12 months. It spent 27 billion in medical expenses. It spent 22 billion in technical consulting services. These are worrying numbers. So your cost to income is like, the expense sheet is like 33 trillion to 45 trillion. 33 trillion in expenses to 45 trillion. Its gross profit is 12 trillion. Then its net profit is 5.4 trillion. But then the question is, you know, even the 5.4 trillion or 45 trillion naira in terms of revenues, did it actually go to the government? Or did they come and say, oh, the government is owing them, they're going to defray these dividends to the principal shareholder from what the government is owing them from probably under recovery or vendor financing debt? Jov, I'll tell you, I don't have faith in NNPC as it is today, not just because of the current management and board, but also because there is excessive and undue interference from the State House in NNPC. And my advice has always been for Mr. President to create a Chinese wall, call the National Council on Privatization, approve a fake memo, and ask NNPC to go on the private privatization process to the market, start evaluation and classification of all the contingent assets and liabilities, and start the process of book building for onboarding NNPC to the market. The only thing that will save NNPC is if it actually becomes a company that is privatized and that goes to an IPO, where the market and new shareholders will decide who the board and management will be. I don't have faith in the current management and board of NNPC. And the current numbers, you know, where it says, for example, that 7.1 trillion is energy security expense, 312,000 barrels per day in a daily crude allocation from the 445,000 barrels of crude intervention stock is going to items like pipeline security costs and going to, you know, allocations to accounts that are parallel to the consolidated revenue fund that are now appropriated by National Assembly. It just tells you all you need to know about the future, that it's not looking bright. You know, we were optimistic about 5-6 months ago when Mr. President appointed a new board and management, but from numbers, you know, we're looking at today, it's not very encouraging. The signs are not very optimistic.
So let me ask you. So I'm still looking at it's about 142-page document. I'm still looking through some of the part of the document. How much was remitted in terms of royalties, taxes, and whatever it is, maybe dividend to the federal government in that year? I think it's over 10 trillion, if that number is correct. Or
can you hear me?
Yes, I can hear you. Did you hear my question?
No, I didn't hear it. I didn't hear it.
I was trying to find out from you how much was remitted to the Federation account in terms of royalties, taxes, and dividends in the year ended 2024, based on this financial statement. Are you privy to that information?
Well, based on what we've seen so far, I don't want to be misquoted, but I think royalties should be anywhere around 1.5 trillion, if I'm not mistaken. Gas flaring penalties for gas that is not trapped and then sent through the process for treatment, or gas that is not reinjected for well optimization, is 1.3 trillion. So probably if you want to, the Auditor General of Nigeria or the Federation wants to go and check with NUPRC if they actually received 1.3 trillion for 2024 for gas flaring penalties. You know, but you know, if you look at the gross profit, so the net profit, it says that they made 12 trillion gross and then net is 5.4. So if you debit it, it's typically 6.6 trillion that went in as taxes to the government.
Oh, interesting. There's a couple of things. Let me see if I can ask them all at the same time. But maybe I'll leave the NNPC for a bit and talk about your general assessment of the Tinubu economy. I try to call it the Tinubu economy because he's the president. It's December already. By May 2029, May next year, is going to be exactly 3 years. And, of course, we know it's going to be political talk all around. Right now, what is distorting their politics is maybe the insecurity that we're bedeviled with. What's your assessment of this government's performance in terms of the economy? And objectively, what should we be looking forward to towards the end of this administration's this term?
To be fair to Mr. President, I'll tell you, he inherited a very terrible treasury. You know, CBN was technically insolvent. The treasury was empty. You know, he had a choice in 2023. And this is what I've always said. He had a choice to either declare bankruptcy and, you know, shield Nigeria from creditors, Eurobond creditors, you know, maturing debt from multilateral development partners. He had that choice, but he didn't take it. Instead, he decided that with over $300 million that was spent a month in subsidizing FX and the about 7 trillion naira that was spent a year subsidizing petrol, he was going to use it to reflate the economy, which he did. These were tough choices that he had to make. He made the right call. You know, removing the subsidy on petrol was the right decision. Removing the subsidy on an FX in order to reduce the black market premium to below 5% and create a market-based foreign exchange system was the right decision. However, with the increase in revenues from revaluation of FX to governments, you know, to state governors, to the federal government, there's been what I call the height of fiscal recklessness, such as we've not seen in a very long time. What has the government done with the revenues it has gotten? We're currently running 3 concurrent budgets. The capital expenditure that is actually available, not what is stated in the Appropriation Act, GOV, is less than 15%. You know, so how do you grow an economy when capital expenditure is less than 15%? I'll take you back to a decision that was taken 2 days ago by the board of the Abu Dhabi National Oil Company, ADNOC, which is a state national oil company for the United Arab Emirates, which the president of the UAE chairs, by the way, is the president of the board. 2 days ago, the board decided that they were going to reinvest $150 billion over 5 years, from 2026 to 2030, at $30 billion per year in capital expenditure to increase the amount of revenues that ADNOC gets on a yearly basis. And by the way, ADNOC is one of the companies that historically has, you know, lended money to the NNPC under their forward sale agreements, you know, where they swap crude oil for cash, you know, for financialization of oil and gas assets, you know. So if you don't have capex to invest in the economy, to invest in areas like security, healthcare, education, which are 3 cardinal and critical areas of infrastructure, and if, for example, you're running a parallel account that is funding the Renewed Hope in Infrastructure Intervention Fund for projects like the Coastal Road and the rehabilitation of Lagos airports, and National Assembly is not privy, and these monies are not appropriated, what signal are you sending exactly? So with the increase in revenues and with the, you know, relative stability of the economy has come the height of fiscal recklessness, such like I've not seen since the independence in 1960. Yeah,
Mr. Kelvin, always a lot to unpack with you. Time is never in our favor whenever we talk. We can also add to that layer, there's record everything in this government. Some great decision, record revenue, also record debt. We're also seeing debt numbers. NNPC is also saying they plan to prioritize increased oil and gas production and outline 60 billion investment pipeline across energy and all of that plenty talk. Anyway, we'll need to book another date to break these things down even further, because at the end of the day, it's for Nigeria to develop and grow. But we must thank you for your expertise, as always, for helping us to make sense of these technical things. Thank you, sir. Kelvin Emmanuel, economist, joining us from Abuja today. Thank you. And that's it on the program. Thank you for your time and company. I'm Jeffrey Uzama. You've been served on Lunchtime Politics. Bye-bye.